Hey soldiers, if you were thinking about purchasing a new vehicle or even a used vehicle, you might want to think twice because financing rates for vehicles are heading up and the prices are really not coming down at all, not precipitously at least.
Look at the size of that trunk. You could put 3 bodies in there. Just kidding. Just trying to levitate the situation.
Auto loan rates are rising. They've hit the highest level since 2019 and will soon jump to 14-year highs. Now, the reason they're jumping, of course, is because the Fed just raised interest rates again just the other day. New data from Edmunds showed the average annual percentage rate on new car loans was 6.3% in October, the highest since April of 2019. The Fed is expected, well, they did raise the interest rate by 75 basis points. So that would be the most since the 1980s. They're trying to quell inflation, but we're still seeing some price inflation when you factor in this case, the purchase of a vehicle because of those interest rates. Now it's working as designed, try to get you to slow down your purchases and, over time, slow down the entire economy when more people say, you know what, I just can't afford it. This is what these interest rate hikes are designed to do. And it might work well in vehicles. If you look at this chart, car loans are becoming costlier. We look at the the federal interest rate, the funds rate that Jerome Powell just raised, the discount rate. And we see that represented by the black line. Of course, the gold line represented by the new car loan annual percentage rate. Now, the average new car out there is going to cost you, it's going to run you just over $48,000, $48,094. That is the average price of a new car for September of 2022. This was down slightly. It was $48,240. So we're not seeing much movement in the price, the average price of a new car. What we are seeing, and if you look at this chart, we can see the average price of a new car has ticked up steadily since 2012. We come over here and we can also see that the price of a used vehicle has pretty much done the same. It's gone up from where it was years ago. Everything increases in price, right? So how do you tackle this issue? What do you do about it? Well, for starters, look, in these inflationary times, we're dealing with the elevated cost to purchase the car, and we're also dealing with the elevated interest rates. So it's just going to cost you more. If we look at the average interest rate out there in terms of these vehicles, we see that for a new car, we're looking at about 6.27%. That is as of the 2nd of November, about 6.27% for a new car. Now, if you're in the market for a used car, you're trying to save some money. So you say, I'm not going to look at new, I'm going to look at pre-owned. Well, they get you there because used cars' average interest rate is 10.33%. That's a handsome ransom. What can you do? Well, for starters, you might want to sit on that car you have right now. Probably is going to wind up being less expensive to take that bad boy to the repair shop, get some maintenance done on it. I love it when people say, oh, I went to the mechanic and he told me that it was going to cost $1,500 to fix my car. So you know what? I just went out and bought a new one. And how does that make sense? So you went out and you bought a new car. You spent $40,000. Let's just say you came in under the average. And you spent 40 grand. Okay, you got into a new loan for this vehicle. And that beats spending $1,500. How? I've never understood that. So you might want to keep that car on the road longer by, giving it whatever it needs. If you don't travel a long way, I mean, hey, look, guys, if you're working from home, hey, you got it made, right? You don't have to put all those miles on that vehicle. So the only way you can insulate yourself from this is to keep that maintenance up. Now, some of you out there may have to buy a new car. And if you do, I mean, you're between a rock and a hard place, because even if you look at the used, as we've just seen, well, that's going to cost you an interest rate. Whatever you save on the purchase of the vehicle is going to probably be ate up in the interest rate. One thing you should do is when you sit down for that car loan, wherever you're getting it from, whether you're doing financing with the dealership or your bank or whomever, figure out whether or not there are any prepayment penalties, because you always want to make sure that there are none, that you can pay a loan off sooner if you decide to do it. Now, on the new car front, 6% is not extremely expensive. It's still far less than the average 16% interest that a lot of people are out here paying on a credit card. So you still are coming in, well under that. But keep in mind, a car is a depreciating item. It's not an asset unless you're using it as a part of a business to make more money. If you're just buying a vehicle for your personal use, this is not an asset. This is definitely a depreciating item. It's going to depreciate pretty damn quickly as well. So keep that in mind. Now, look, let's move over to another very important issue. We've got somebody out there buying a crap load of gold. I mean, whoever's doing it, it's got to be a country. No one else, no corporation, and maybe there are a handful, maybe 2 or 3 corporations might be able to afford to do this, but this is probably a country. And we've got to understand that here recently, we've seen that central banks are increasing the pace of their gold purchases. Now, why is this important? Because this is a flight to safety. If governments are purchasing gold to this extent, it must mean that they know something or suspect or fear something that's going to occur to disrupt in some way the order of things, the financial order of things. As the Fed has tightened monetary policy by raising the interest rates at its most aggressive pace in 40 years, real rates in the U.S. have soared back into strong positive territory. Historically, that has reduced demand for gold, zero carry. But as the chart below shows, you check out this chart right here, while notably off its highs, has not cratered as much as some might have expected. So the gold price has not gone down as much as we might have expected when we see these interest rates rise. Again, we've covered this on the channel, but if you're new here, gold is the lighthouse, stable, standing on firm ground, has been for 5,000 years, okay? The dollar, or whatever currency or commodity you want to, play it off against. Let's take the dollar in this instance. That's what fluctuates. It goes up and it goes down. So as we see macroeconomically, the principle is, as we see the dollar getting stronger, we should be able to see gold becoming less expensive in comparison to the dollar, okay, as it gets stronger, as these interest rates are raised. That's what we typically see. And as the dollar gets weaker, or as interest rates are lower, then gold appears to have more value in relation to the dollar. Now, the dollar is not the only thing you can compare gold to. You can compare it to other commodities like oil, other currencies as well. But in this case, we're just looking at it from the standpoint of the dollar. Now, the central banks, they've been out there accumulating gold reserves at a furious pace. The most furious pace seen in the last 55 years, or well over half a century. This was a period when the U.S. dollar was actually backed by gold. So the last time we saw this type of rush into gold by the central banks. According to the World Gold Council, central banks bought a record 399 tons of gold worth $20 billion in the third quarter of 2022. With global demand for the precious metal back to pre-pandemic levels. All right, so if you look at the chart here, love the charts, you can see that the purchase, the level of purchasing here recently is almost literally off the charts. So what's going on here? Retail demand by jewelers and buyers of gold bars and coins was also strong. So that's saying not only are the governments getting in on the act, but the average individual is as well. This is according to the World Gold Council in its latest quarterly report. They also say that the world's gold demand amounted to 1,181 tons in September. That's good for 28%, though other central banks also bought a substantial amount of gold, but did not publicly report their purchases. Now, that's another thing that we'll see that we're getting into is these central banks are starting to get tight-lipped about what they're doing with respect to gold. Now, I think that that's as a result of what we've seen the United States do in terms of weaponization of the dollar. A lot of these countries are watching that, allies and adversaries alike, and saying, look, we need to hold this information close to our vest because we see what the United States will do when they know that you have a certain leg up financially. They'll try to interdict it in some way if they have a policy disagreement with you. And it's not just the United States, it's the Western powers. World Gold Council says among the largest buyers were the central banks of Turkey, Uzbekistan, Qatar, and India. Central Bank of Turkey remains the largest reported gold buyer this year, adding 31 tons in the third quarter to bring its total gold reserve to 489 tons. The Central Bank of Uzbekistan bought another 26 tons. The Qatar Central Bank bought 15 tons. The Reserve Bank of India added 17 tons during the quarter, pushing the gold reserves to 785 tons. Now, this is interesting. Retail buyers of gold bars and coins also surged in Turkey to 46.8 tons in the quarter, up more than 300% year on year. Now, a lot of the Asian and Middle Eastern regions have an affinity with gold. And part of the reason for that is because they don't have the world's reserve currency. So they look at this material, this yellow material, gold, as something that holds tangible value. And it's also included in dowries when people are married. It's seen for what it is. We typically don't look at it that way in America for the most part. And the reason behind that, I believe, is because we do own the world's reserve currency. Unfortunately, rising interest rates spoil the party for gold bulls, with exchange-traded funds storing bullion for investors becoming net sellers. Indeed, offloading the bullion by ETFs countered buying by central banks. So those ETFs must have gotten rid of a lot of it. This pushed the gold price down 8% in the third quarter, which for many people, they're going to see that as a buying opportunity. Gold is a non-interest bearing asset, absolutely true, and investors tend to move their money to higher yielding instruments during times of rising interest rates because, again, that gold is losing the value. Gold has a very specific function in a portfolio, and it is not to bear interest or to produce some cash flow. It doesn't do that. Other assets do. Gold has a different function. We'll get into that in just a second. An overly strong dollar has also not been helping gold. We just talked about that. And commodity prices in general have suffered because of the strong dollar. Gold prices are down about 9.3% year to date, and nearly 20% below their March peak of $2,050 per ounce. Now, luckily for the gold bulls, the long-term gold outlook appears to tilt bullish. Markets are currently primed for the fourth 75 basis point hike in a row, which occurred yesterday. People are thinking that the Fed is going to relax this very, very soon. And it's funny because he actually had comments yesterday that lead me to believe that may actually happen. Now, we had a live stream of his post-hike comments, and for whatever reason, the bandwidth got real funky. But he said moderation could come as early as December. Moderation being a halt in the increase of interest rates, and that would be good news for gold. Now, the purpose of gold. Gold's purpose in a portfolio is as a store of value to preserve purchasing power. It has done that very well over thousands of years. Sure, we're talking thousands of years here, okay? We're not talking, the last 5 years or 10 years. We're talking a long-term store of value. Gold has acted in that fashion quite perfectly. Now, gold markets have also been roiled by a mysterious buyer who purchased 300 tons. Now, we just talked about the fact that the governments, what they did in terms of their purchases of gold. The central banks bought 399 tons of gold in the third quarter. We've covered that. That's almost, again, double the previous record. Almost double the previous record. Bloomberg reports just under a quarter of that amount went to publicly identified institutions, stoking speculation about who the mystery buyer or buyers were that waved in the other 300 tons of gold in Q3. So you've got an entity out there, or more than one, who has purchased 300 tons of gold in the past quarter. While most central banks inform the International Monetary Fund when they buy gold to supplement their foreign exchange coffers, others are more secretive. Few countries, okay, let's start narrowing this down. Few countries have the capacity to undertake that kind of buying spree. China is one, okay? The world's number 2 economy rarely discloses how much gold its central bank is buying. In 2015, the People's Bank of China revealed nearly a 600-ton jump in its bullion reserves, shocking market watchers after 6 years of silence. So China could definitely do it. They've got the money. Russia is the world's second biggest gold mining nation, typically producing more than 300 tons a year. Before February of 2022, when they invaded Ukraine, it exported metal to trade centers like London and New York, but also to nations in Asia. They don't want to have their gold in the hands of any other country, especially a Western country these days, because you saw what happened with all of the sanctions. I'm sure they have reversed course, and they've been repatriating a lot of their gold over the years. Okay, Russia is also the second biggest gold miner, right behind China. China is the biggest. The U.S. comes in at actually 5th place. So the China could do it, Russia could do it, they could do it. Oil exporters. Few nations have done better out of this year's energy crisis than the Gulf nations. Saudi Arabia and the UAE and Kuwait have all reaped a windfall, and some have been plowing cash into foreign assets through sovereign wealth funds. They may have looked to gold in order to diversify. Saudi Arabia has the biggest gold hoard in the Arab world, but hasn't reported a change in its holdings since 2010. What's that telling you? That's telling you if you go out there and buy gold, don't tell nobody about it. India's central bank has made large gold purchases before, buying 200 tons of from the International Monetary Fund in 2009. Since then, it's tended to buy more gradually while providing timely updates to the market. So they do disclose what they do, or do they? Are they giving us the whole story? So this article is asking the question, was it China, Russia, the Saudis, or India? I'm going to add something here. Was it the United States of America? I was looking, and you can correct me if I'm wrong on this, but I can't find anything within U.S. code that obligates the government rather, to disclose to the people exactly how much gold the United States owns. The United States could definitely do that. So some country out there, it's either China, Russia, the Saudis, India, or us. Okay, all major players have decided that they need to increase their gold coffers. Remember, gold's only purpose in a portfolio, besides looking pretty, is to preserve buying power. It's real money, okay, which really hasn't fluctuated in thousands of years. The saying goes that if you were alive during the Roman Empire, you could purchase a custom-made tunic, custom-made pair of sandals, and a fine quality belt. So basically a suit of clothes and shoes for a male. You could do that with 1 ounce of gold. Now an ounce of gold today is trading around $1,600. You can go out there and you can buy a $1,000 suit. You can buy a pair of Bruno Magli's, which, $400 or $500 will get you in the game. And then you can buy a nice Gucci belt. Again, I don't know what the fascination is with Gucci belts, but hey, knock yourself out. And still have a little change left over, okay, for a nice meal. You can do that with an ounce of gold. So the value hasn't changed much since the Roman Empire. So that proves that we've got a good store value going with that 1 ounce of gold. So governments understand this. Do with that information what you will. Gold has done very well compared to other assets, again, over the long term. Had somebody tell me, oh, well, Bitcoin is blah, blah, blah. Bitcoin's been out since what? It hasn't even been out 20 years. Okay. God bless all the crypto folk. I hope you guys make a lot of money. But let's be real here. Don't compare something that was valued during the Byzantine Empire to something that hasn't even seen 2 decades yet. Okay. That's not a smart comparison. Let's take a look at another commodity, all-important oil. A lot going on over there in that sector. Is Iran going to go to war with Saudi Arabia? How will that affect your wallet? It will if it happens. Go ahead and watch that video, guys. I'll talk to you soon.